Now we got people out there trying to associate all the millions of failure to delivers reported in the month of June with long sale shorts. They're trying to say it is attached to warrants that got exercised in the month of June. But let's take a look at the naked short sale information from Sec.Gov. It says a naked short sale, the seller does not borrow or arrange to borrow the securities in time to make delivery to the buyer within the standard settlement period. As a result, the seller fails to deliver securities to the buyer when delivery is due on the T35 closeout date that we see on Chart Exchange. When it is due, known as a failure to deliver or fail. Take a look at the next paragraph. It says failures to deliver may result from either a short or a long sale. There may be legitimate reasons for a failure to deliver. For example, human or mechanical errors or processing delays can result from transferring securities in physical certificate rather than book entry form, thus causing a failure to deliver on a long sale within the standard settlement period. So could it be processing delays from warrants being exercised in June? Possibly, but let's keep reading. A fail may also result from naked short selling. For example, market makers who sell short thinly traded liquid stock in response to customer demand may encounter difficulty in obtaining securities and when the time of delivery arrives. That is the key point there, because I think there's been a lot of demand for Mullen stock, especially at these cheaper price levels, and there has been difficulty locating shares because Mullen, it was a hard to borrow stock up to like 45 days before they magically came off of the threshold list. And that point right there tells me that there's been a lot of naked short selling going on with Mullen Automotive. Look how the price is being compressed between 14-cent close on Friday and 15-cent close on the previous day. Now the last part says naked short selling is not necessarily a violation of federal securities laws of the commission's rules. Indeed, in certain circumstances, naked short selling contributes to the market liquidity. Very interesting. For example, broker dealers that make a market makers in a security generally stand ready to buy and sell the security on a regular and continuous basis at a publicly quoted price, even when there are no other buyers or sellers. And you know, lately Mullen, it seems like it's been only market makers selling the stock because it continues to get pushed down, and only buys, it seems like, is only the 100 codes that show up in the bid and ask. And that's just merely price suppression. When you see 100 on as a buy and 100 as a sell, they're suppressing the stock. Thus, market makers must sell a security to a buyer even when there are temporary shortages of that security available in the market, i.e. Mullen being on the hard to borrow threshold list for almost 50 days. This may occur, for example, if there is a sudden surge in buying interest in that security, or if few investors are selling the security at the same time, because it may take a market maker considerable time to purchase or arrange to borrow the security. A market maker engaged in bona fide market making, particularly in a fast-moving market, may need to sell the security short without having arranged to borrow shares. Naked short selling. This is especially true for market makers in thinly traded illiquid stocks, as there may be few shares available to purchase or borrow at a given time. So let me know what you think about Mullen magically coming off of the threshold list. Do you think the amount of failure to delivers had anything to do with warrants being exercised in the month of June, or are people just trying to say that to hide or mask the amount of naked shorting that's going on in Mullen stock, keeping at these price levels. You see it close exactly at 14 cents on Friday's trading day, and then the day before that it closed exactly at 15-cent mark. Suppression at its best. And do you now agree with me that when I say someone is keeping this stock down up until the shareholder meeting to create fear? And now, me personally, I think Mullen could definitely make a run if something is done with this reverse stock split, whether it's adjourned or taken off of the table. I think Mullen can run off of that, because especially seeing what AMC just did after the court went in their favor, you see it just jumped about 100%, and then it came down around 67%. Courts were betting that that case was going to go in their favor, and the company was going to dilute shareholders even more. And surprisingly, it went into retail investors' favor. Surprise catalysts like that can really make the stocks run, as you can see AMC did. And I think that surprise catalyst for Mullen would be to do something with this reverse stock split, and then Mullen can run as well. And of course, these are just my thoughts and opinions, not financial advice. Let me know what you think about all the information covered, and I'll catch you guys in the next one. I'm gone.